Welcome back to the show, Mel. How are you?
I'm doing well. I was saying before we started, I'm a little feeling a little summertime sadness today, but that's okay. That won't impact my ability to be exploring all the hot takes of what happened in markets and politics this week.
It's Friday, July 24th, and it feels like it's the third day of summer. So,
Yeah.
um, for Edmontonians, I don't think anyone feels the same way you do. We're all very excited about it being 30 degrees out. But sadly for me, it's been a volatile July. And if you've been watching your screens, you know that the script has kind of flipped and the AI momentum trade has all but popped to an extent. The bubble-like extremes from April have officially cracked, and the first crack is always the most dangerous one. It's the shot across the bow, so to speak. And right now, we are in what I would consider to be deeply oversold conditions in the semiconductors trade. The thing about momentum switching means that money is never destroyed. It's just it shifts and it flows elsewhere. And the market has yawned for the most part all new hyperscaler capex news. Mel, I'm sure you're not necessarily paying as close attention to the new earnings season, but Intel went out last night and blew the doors off. Google reiterated capex for 2026 and actually expanded on what they were likely to spend in 2027, and the market yawned. They didn't. It's just like, give us something new. The play. What more can you do for us? And markets don't tend to top on bad news. They almost always top on good news, and they top on good news when people stop paying attention to it. And so, while we are in some very oversold conditions, and I do expect that we're going to see pretty violent bounces here, the momentum playbook would be to sell into bounces and strength. Now, with all that said, if money's flowing out of tech, where is it going? And right now, I think it's quite clear when you look at Europe, Canada to a lesser extent, but more importantly, the United States, you have to take a peek at real yields. And real yields are breaking out globally, not just in the US, but in France, the UK, German bunds, Japanese JGBs. Right now, the price of money is increasing, and investors are rotating out of long duration being stocks that are priced very aggressively and to perfection, but also to grow really quickly. And high growth companies, when money rotates out, they're usually going somewhere more safe. And that rotation usually finds itself in financials, energy, REITs, insurance, and select healthcare and biotech companies. So this is very similar to the pre-Great Financial Crisis market regime, where real rates and fundamental compensation for risk was actually starting to matter. And all this bubbling underneath is, I think, mainly a result of the macro backdrop. And the new Fed chair, Kevin Warsh, has made it quite clear that there is a non-zero chance, and I think in the market, an underappreciated risk of a rate hike as soon as next week. And the Fed is kind of staring down a three-headed monster in terms of inflation drivers. You have relentless AI-driven demand. We've talked about that endlessly on this podcast. It's driving up the cost of equipment and electricity, et cetera. There's now this, and we'll talk about this later in the podcast, but the tariff regime reigniting. And I think third and perhaps the most concerning is the energy shock that is reemerging in Iran. And with an ongoing war, and I think patience there growing thin, and shipping lanes through the Red Sea being blocked, and the Strategic Petroleum Reserve, the SPR, being largely depleted, there's not a lot of buffer that we might have had back in March for energy prices, especially in the United States, staying or remaining low or relatively low. And energy costs are passing through because there isn't as many levers to pull on the consumer side to keep the pump prices lower as they head into the midterm. So it really feels as though this market is dancing on a very thin wire. Oil prices jumped above $100 a barrel, Brent crude, this week. Trump said that he's weighing doing a massive attack on Iran, and obviously this is an escalation of tensions. I'm not going to touch any more on what I think is going on there. I don't think that there's anything for us to add at this point. But inflation is becoming a problem. I don't believe that. I think the market's underappreciating the risk of there being a rate increase next week. However, I don't foresee it occurring because I do believe that war still is of the opinion. So the Fed chair of the opinion that the energy shock is going to be transitory, which again is dangerous. So with all of that being said, I actually think the most important thing said this over the last 2 weeks came out of Jamie Dimon's mouth. And I know, Mel, you have a slight admiration for Jamie Dimon.
I do. He needs to run for something. Speaking of the intersection of market and politics.
Yes. He recently came out and had a long conversation about markets, treasury bonds, how he foresaw things. And the last time he had a headline grabbing quote was back in 2022, if people remember correctly, and when he said that he foresaw there being issues with the Fed raising rates. And it's, I don't think, a coincidence that it's occurring again. The headline was Jamie Dimon says don't buy stocks. And most investors, when they see the most influential banker in the world say not to buy American stocks, they just think they have to sell everything. And I think we had this conversation a little bit, but CEOs have different jobs than investors do and average people do. Their job is to steward the capital of the investors and their businesses, and they need to make decisions on time horizons that are different than that of the average individual. And in this interview, if you actually listen to it, he said, I don't like prices today. That doesn't mean everyone should sell their stocks. Or when he says, I'm waiting for a better opportunity, that isn't the same thing as saying the market's going to crash. And these nuances tend to not be interesting for headline writers, but also misinterpreted by most investors too, right? So everybody gets this wrong, or they tend to get this wrong. And then they make bad decisions, which then tend to be really impactful on their overall return profile. So I wanted to make this point because I think most people make a dire, poor decision when they listen to headline risks or headline statements like this from very influential and important people. So as I mentioned, we have seen this movie before. We had 2022 existed, and Jamie Dimon at this point was like, I foresee a hurricane coming. And that hurricane being, I think you had a lot of folks needing to, if we put ourselves in the shoes of 2022 investors, mortgage costs were the concern. That was very pertinent for Canadian investors, but more specifically, more broadly, everybody was a little bit concerned about refinancing risks. And Jamie Dimon was kind of speaking to that hurricane coming in 2022 when the Fed actually raised rates 500 basis points or 5% in a matter of, a very short period of time. And when he was saying that, he wasn't trying to call a bottom or a top in any market. He was just explaining the risks that concerned him as a CEO that manages the largest global bank. And everyone just sorts of tries to fit that statement into their individual life. And that's such a silly thing to do. You need to follow your own process, not somebody else's, especially not somebody who is stewarding capital for a bank that will exist well beyond the life of that CEO and the people that are banking there. And
yeah,
I think go ahead.
Just to interrupt you there on that. I mean, it's really, I think this happens in politics too, where you see a headline and you see a top line thing, and then you almost skip 1,000 steps and don't apply that nuance to what it means in your life. So, when I hear politicians, or in this case, CEOs, say things that sound controversial, it's a signal in the noise type of thing. Like, it doesn't literally mean that. It means that there's some other stuff going on underneath that maybe could be valuable to me as an investor or somebody who's looking at the market. And I think that is actually a principle that applies really well to politics as well. I just wanted to put a fine point on that.
Yeah, and What's crazy though is that JP Morgan just broke out of it to all-time highs.
Mm-hmm.
The stock itself. And it's been in this base for quite some time, like a good year and a half. And it's finally breaking out as the CEO comes out and says, don't buy 30-year treasuries. And I think that the market's super hot. It's just, the market and your portfolio does not care about headlines.
Nope.
And quite honestly, neither does he. He's playing a different game than you are, and you need to understand that. Mel, I was putting together like our tiny little topic arc for today. And I know that this isn't something that you spend a ton of time thinking about, but I do believe this should be of higher importance, not for you specifically, but for the Canadian government in general. Mm-hmm. And it seems as though we're kind of playing checkers while the rest of the world's playing chess on the policy front here. You have very limited commentary out of Mark Carney's corner with regards to what their view on AI models are. And obviously the two major players being China and the United States, there's been significantly more. They're louder, more important economies. So they're also on the leading edge of the technology itself. But I just find it to be disconcerting that there's nothing to be said here.
And it makes perfect sense to me, though, from a political perspective, because if you look at where the Overton window is going on so many of these issues, we've talked about this several times on the podcast of how data centers and AI are becoming sort of like the new flashpoint hot button topic that pipelines used to be. Mark Carney is actually not at all incentivized from a political electoral perspective to be talking about any of this, which is ironic because it's everything investors and the market wants to be hearing on certainty, on the sort of level of welcomeness that Canada is going to have, even though a lot of this is more provincial in scope. But this is why it is tough for politicians if they don't have the political courage or feel like they have the political leverage to have those conversations. They're not going to have them at all. And that's where things get a little murky when it comes to trying to anticipate what's going to happen with some of this.
That's a really great reframing for me. It's not worth it for him. And which just makes me annoyed and just points more so to this statement we made, I think, earlier than most, that data centers are the new pipelines. Mm-hmm. And I'm not sure about you, but I've spent all too much time reading the commentary underneath each CBC and headline about the data center being built here in Edmonton. And what people really think about it. And interestingly, I'd say I go to men's league golf, and we're having these conversations with folks. It is consistent. People really think these things are the devil. And I'm going into business meetings and client meetings and having to reset everyone's priors on how to frame the understanding of the infrastructure that's being built, its impact, the features and of what's actually occurring, what's being built alongside it. And this happens over and over again. I feel like this happened during the pandemic where the messaging and communication was awful. The same thing, truthfully, is occurring here. And when you reframe it as it's not politically in their best interest to even bring it up, it tells the story.
You also have, if you look at the commentary that's coming from the small tech sector that we have, like the commentary that Toby does and others, if I'm Mark Carney, I don't know that I necessarily want to get into an open conversation about what it's like for the tech sector to thrive and grow in Canada, because I'm not winning on that argument. And I'm also not winning. So I'm not winning that argument with investors and people who are allocating capital. I'm also not winning that argument with the public. So there's just really no incentive to have that conversation. And again, this is just, you talk about your men's night and how people talk about things. I understand that it is fun to I'm sure you hang out with very intelligent and educated people who are keeping up with the news, have professions that require them to have a finger on the pulse of many things. But it just goes to show you that the way that we are talking about these things in the media, and the fact that our government does not stand up for them at times and does not put their neck out to advocate for what's best for the economy and not just what's best for whatever the flavor of the day is, can be quite damaging, because even really intelligent people who are very well-meaning are not actually basing their opinions off of truth. They're basing their opinions off of, what do I want to say to make sure I fit in the social sort of zeitgeist of whatever's going on here? What do I want to say to make sure I'm listening to, what the environmentalists or what anybody that's opposed? And that attitude, I fear, has permeated into the private sector in a way that's going to continue to stall growth in these areas. So yeah, like I don't mean that in any disrespect to people in your men's league, but it's just, it's interesting to me that that's like, not only on this topic, but on other topics, that seems to be a common theme.
Yeah. I mean, I was just at a lunch with a very, a CFO of a well-known private company in this city. And I had to explain to him how a cloud data center worked and the way in which open weight versus closed and models work, how you can have one at home, how those things are updated, the difference between Anthropic, OpenAI, and then the open weight models from China, and why and how that impacts capital and capital formation in the area. And you think that these it's a new technology, but very important with regards to like investing and understanding markets, being of relative, I think it's almost like a different language for most folks. And I do hope that this becomes something that we're having an open conversation about, because the lack of understanding will contribute to poor policy design, and I think a continuation of headlines being bias towards that ignorance and lack of understanding, which will then impact our economy and have this terrible feedback loop where we're truthfully shooting ourselves in the foot again, in the same way we did with pipelines for the last 35 years. Yeah. And so we can't allow that conversation to go that direction, because if we do, it will impact us.
Yeah. And the last thing on this as well is, we talk a lot on this podcast about patterns and cycles. And sometimes we mistake those patterns and those cycles as being the same things happening over again, but it's not a repeat or a verbatim cycle. It's a cycle that rhymes. So I think something that's really interesting when it comes to this particular topic is that if you are the type of person who has a portfolio or is in a, wealth, financial, business situation where you're in more of like a set it and forget it mode, that is going to have there's going to be a different urgency for you to be as ingrained in this stuff if you haven't already reached that point in your life. Because the things that you had to do to get to that level in the past 20 or 30 years, you talked about this a few podcast episodes ago, in terms of what stocks and companies those are. They're different companies and they're different spaces that are going to emerge to get to the next level. But again, we could probably unpack this on another podcast episode as well, but what are those common themes to when you're investing and looking at this from a political perspective? In the 80s and 90s and 2000s, if it was pipelines, now it's AI data centers. Like, what are the sort of rhymes and themes of the next big thing that we need to look at, irregardless of the fact of that they look the same way they did that the last big thing came across our desk?
Interestingly, I think this is what has, in my industry specifically, but I think this occurs everywhere. By definitionally, we're capital allocators, but everybody is to an extent. Your mother is, your son is. They're allocating their time and resources to things in their lives that matter to them and keep them alive or keep them safe, keep them evolving, et cetera. In the past, it's always been like sum of parts. We're going to like peel everything back, see what it's worth. And we'll attach a market multiple to earnings to give you a stock price. Nowadays, it's very much market narrative is the driver of the structural flows from a portfolio allocator's perspective. If you are investing money based on the sum of parts value of a stock, you're going to miss everything. You're going to miss the story, because what actually moves the price is the market narrative, what people feel. And that is a complete shift from where we used to operate back in the 80s and 90s to today, which is much more driven off vibes.
Because everybody who feels now gets an opportunity to very easily participate in the market in a way that you would not have seen in the 80s and 90s and 2000s. So it's the same thing with social media and comments on politics. Before, you would have had a sort of select group of people, like everybody would have had opinions on these things, but only a select group of people would have had those opinions, broadcast in that way. So I think there's a lot of similarities between the two.
And interestingly, we have new tastemakers. In the past, we had news outlets that ran the narrative of the world, and they were very condensed. That power was condensed into very specific areas. And as a result of this, they had a lot of control over our trust and our way of thinking. And those centers of influence have been disrupted and redistributed. And our tastemakers now are, in my industry, it's like 400 people on Twitter that have an enormous amount of power and taste and influence on market narrative. In other industry, it's more so directed at creators on YouTube. And then in fashion, I think that's probably more condensed on Instagram and TikTok.
And Substack, increasingly, we could do a podcast on that as well.
Absolutely. And Substack has really strengthened it's funny because my wife, for the first time, this is really embarrassing for me, asked me if I had heard of Substack before.
Oh my gosh, that's hilarious.
You know how bad that is? My podcast and newsletter has been on Substack.
Has been hosted 2019, I feel like. That's
probably,
hilarious.
Yeah. So that's insane and really sad.
Adriana's not listening. We'll have to bother her about that.
No, of course she's not. How could she? She would have to go to
she's
Substack.
Listening on Spotify. She's listening on Spotify, not on Substack.
That just speaks to the new world order. And I think a lot of folks are still not understanding this. And I do believe it's actually kind of a new revelation for myself even. So if I believe, and I'm arrogant enough to think that I'm like slightly ahead of average person in terms of like where media trend is headed, I do believe that there's an importance around understanding who the tastemakers are in markets, how you read what they say and feel and think, and then implementing that into how you invest for the future. Because that is what impacts price, not the sum of parts like it used to be in the past. And it's not what our institutions are telling us that shape our opinion anymore. It's very much fractured and diversified to a new group of folks. And those people are the attention-grabbing people. And I want to add one additional tweet that I think is relevant to this. There was a long thread from an investor who spoke about the mistake that athletes make when they retire. And he used two really great examples. They used A-Rod. Everyone remembers who Alex Rodriguez is, generally speaking. He signed one of the largest MLB deals back in the day. It was like $250 million. The guy was worth close to $1 billion at retirement. He was largely remembered for, being a really great player, but for dating J-Lo. But what was interesting about his like, he starts this fund, he has a little bit of it, he has a TV show, but he starts investing in like real estate and areas where having a large following and a ton of demand and influence on people don't matter.
Yeah.
And then you then compare him to somebody who recognizes where their power lies. And I don't like to use this human being as an example, and maybe I shouldn't, but P. Diddy with all of his alcohol sales. And then you start to think a little bit deeper about this. You have Sydney Sweeney, who has launched a whole bunch of additional products. Women have been doing this for forever. Kim Kardashian is incredible.
Yeah, that's who I was thinking of, is Kim Kardashian.
Right? She is the best. But male athletes don't do this well at all. They think that they can now just shift from being incredible, well-known, recognized athletes to then being superstar venture capitalists. And what they should be doing.
I wonder if that's because they didn't curate their audience in the way that creators or influencers did. It's kind of interesting when you think of the sports analogy, not to go too far down a rabbit hole, but like you don't really curate your audience as an athlete in the same
They
way.
don't even appreciate it. That's the
Yeah.
difference.
Yeah.
Whereas creators do, because they were intentional. And
Yeah.
I think it's a huge mistake that athletes make. Their superpower, and I think CEOs and founders and venture capitalists and private equity, they're all recognizing this. But I think it needs to be stated that if you're going to being famous is really, really powerful these days, and more so than it ever has been in the past. And wielding it properly is the hack. It's not the capital that you've acquired because you're an incredible athlete. It's the attention and the eyeballs that now follow you as a result, and then utilizing that to sell something. And what I'm trying to like reverse engineer here is that is how politics, policy, everything is crafted these days. I mean, I think it's no surprise that AOC is a leading candidate in the United States, not for anything other than her being obviously very beautiful and great on the mic. She's very quick-witted. It's not her policy that a lot of folks are attaching themselves to. She is largely graduating what she's doing to new things. She hasn't been overly consistent, but it's the fact that she's so quick-witted. She's got a massive following now as a result of being very, very beautiful and well-spoken. In the United States, being a great policy person does not get you elected as president anymore. Donald Trump is the most famous person on earth. And why is that? Because he's loud and audacious and ridiculous and mean and unforgiving. And like, he's got all of these characteristics of a villain, and he plays into it and it makes him famous. And that's why he stays relevant. He's always in the news. So politics has, I think, to a lesser extent in Canada, certainly, but the tastemakers are those that can demand attention and eyeballs and headlines, and being a great policy writer is not going to do that. So we need to understand that moving forward, I think.
Yeah. And like, ironically, the thing that both Donald Trump and AOC have in common is that they both broke the mold. And I think when you break the mold of something, and even people like Kim Kardashian have done this as well in the past. When you break the mold of something, I even think of Bethany Frankel as like a reality star when she sold her company to Beam. Like whenever you are in a space where you are able to break the mold, you become aspirational in a way that somebody who sort of like came up through the ranks, that it was sort of expected to accomplish that, is because now you have the audience of actual power, which are all the people who maybe were in the mold, but also the other people who feel like they didn't have power, because you are now your presence in those roles or in those positions signals to them that they can do that too. And hope is a powerful thing in capitalism, in democracy, in so many areas. So I think that's really why like AOC and Donald Trump have almost nothing in common, except for they both did what they are doing exactly in the same way.
Absolutely. I really, really agree on that. And I could pull on this thread for a while, actually. My thoughts here are that if we are going to view our world as being completely new, and in my industry, I believe that it's very important to find out and suss out who these tastemakers are, the narrative drivers and writers, not so that I can become one, but so as I can follow and understand where things are going, because that is my job. I think that is also the case and the truth for politics, just as importantly. And so if we're going to stand around and get mad about it, I think it's silly. Yeah. And I think I have noticed is that billionaires or just the ultra wealthy are starting to, I think they've also recognized this. And what they have ended up doing is they've started to borrow this or try to become tastemakers themselves. And this is where there's a YouTube philosopher who's like in his late 20s, Jonathan Bai, who ended up
So many
immigrating.
oxymorons in that statement. I can't.
I know, it's ridiculous. He mostly interviews, but in any case, where I'm going with this is that he has sort of identified America as shifting and changing towards a like this this class of people that used to be like a democracy, when in reality it's like an aristocracy, which I think is accurate and probably true. Or the idolation of the billionaire class is very real. The fact that those folks have been delivered a lot of influential power, I think, is not very different from the 1800s, but kind of eroded during the 1900s and has returned today. And identifying that is important when you're trying to understand how the world works. My job, and I think yours is also not much different, isn't necessarily to change the world or to make it better necessarily. Obviously, we're all contributing to that on our own in our own individual way, but more specifically, like our job is to understand how it's working and then help people also understand that, and then watch it and try to interpret it and invest in that and make sure that it's all working correctly. So now I point all of this out so that I think other folks can start to recognize it as well. And if there's ever a politician in Alberta that's seeing this trend play out, Danielle Smith has done a very nice job in terms of positioning herself as a tastemaker, so to speak, in Alberta. I don't think it's by accident that she went and became a radio person before then returning back to politics. That worked out very well for her. If the NDP wants to have any shot at having a relevancy in this province again, they need to find somebody with equal star power. Because currently, the guy there is not famous enough. He's certainly not good enough. He's not quick-witted enough for sure, because he can't make a news headline to save his life. And I don't think there's a lack of areas for him to criticize and to make waves. So
yeah, and I think, I mean, Smith in the way that she's approached things has definitely, I think, adopted a break the mold type trope and approach as well. I think that even if you just look from 2022 to when she became premier after winning the UCP leadership to today, a period of 4 years, there's a lot of things that she said and believed in that people were aghast by, where now if you poll people, very large majorities will agree with her. Not to say you have to agree with everything, but I think that this is the type of sort of thing that we're talking about, of people who are being willing to say a thing or put something into the Overton window that maybe wasn't there before. And I think that mold breakers are the people who are getting the rarest, as we were talking about before the podcast press record as well, that the rarest and most valuable form of attention is people's time, or things that time can buy, or things that time can give you. Sorry. This is why the whole theory, we won't get into talking about specifics about this, but this is why the whole theory of, being muscular and having muscles is going to be a status symbol in the next 5 to 10 years, because it's not something that you can take or fake, and it requires that you are at the gym doing the things, which is time, which is a status signal, because if you have the time to be doing those things, you are in sort of a different league when it comes to that.
Yeah, I completely agree with you. Let's shift gears a smidge. We're going to avoid the Quen Kimi 3 Chinese American model war. I'm going to write about that in the newsletter. What I'd rather jump to is the tariff situation. Obviously, that this is it's the middle of summer. Not everyone's paying attention to much, but obviously Trump's getting loud, and there's a very real tariff being implemented, 50% tariff, it sounds like. There's an estimate from Trevor Tombe recently on the share of exports being affected here. And based on the HS6, so there's a belief that BC, Ontario, Quebec are the most exposed to these new tariffs. I'll just throw off a couple impacts. It sounds as though the share of exports to the US facing the new 50% tariff, roughly 13.7% of those exports out of BC will be affected, a whopping 1% from Alberta, 9% in Ontario, and 10.8% in Quebec. Um, I think it's no surprise to anyone that Alberta and Saskatoon are largely unaffected by this. And the economies of our neighbors to the west and the Ontario Quebec grouping there are the most affected. Mel, I know there's been an endless amount of noise here,
Mhm.
and I think it's fairly fair to say that the tariff regime and plan out of the White House is not exactly well organized. And we sure as heck don't know for sure what they want. But I'd like to hear your thoughts on where we're currently at, and then we can
Mhm.
kind of riff from there.
Yeah, so just sort of a high level update. We talked about it a lot, but the negotiation of CUSMA or the USMCA, whichever acronyms you like to place first, based on whatever you're trying to signal about which country you care about more. Those renegotiations and reviews, rather, were sort of supposed to start in early July. And you will note that Mexico had been already engaged in these discussions with the United States, whereas Canada really wasn't engaged with these discussions. And so the purpose of what was supposed to sort of happen in July is a sort of renewal of CUSMA until it expires in the next decade here. And so that didn't happen. The United States decided not to renew CUSMA, which means that we now go into a period where, it's more complicated than this, but we are reviewing CUSMA on an annual basis from here on out. And the reason why that's relevant for Canada is because obviously we have a very strong trading relationship and export relationship with the United States that is responsible for a great deal of our economy. So even though in some of the figures that you talked about, Alberta is only, according to that Trevor Tombe graph, for these new tariffs, it's only 1% affected. Well, Alberta exports most of its stuff to the United States because we export a lot of oil to the United States. So this is really important when it comes to just Canada's economic survival on its own. Now, there's a lot happening here in terms of what these tariffs mean. On July 20th, Trump says that he's going to add an additional 50% tariff on certain Canadian goods. So notice this is Canadian goods. And he's doing this in retaliation to what he describes as discriminatory treatment on alcohol, dairy, and autos. So hot topic issues that we've been discussing quite a lot. It's not surprising to me that after the ceasefire in the Strait of Hormuz broke and the prospect of that conflict wrapping up in a way in which America gets a win. Plus, we have midterms coming up this fall. So it's surprising to me that Trump is trying to find a new enemy that's not himself as to why, when his Republican Party is going to constituents in the midterms, where 100% of elections in the House and 30% of elections in the Senate are going to be up for grabs. It's not surprising to me that he's picking a new enemy that's not him and not the actions that he has taken. So the real question when it comes to what do these tariffs mean, it's not necessarily like the economic impacts are, I think, very important to consider and look at because that will affect real-time prices and economic growth for Canada and the dynamics that we have with the United States. So it's not really the economics that I am 100% concerned with, though. If we're looking at where the puck is going on this, I'm trying to understand what it means and signals about what Trump views about its relationship with Canada, and the way that Carney is responding as well is very telling. So we see, a couple more points here before we kind of get into a discussion about this. We obviously see Carney trying to articulate to his base that this fiction that we don't need the United States and that we can be aligned with Europe and we can be just as well off, perhaps better off, which is just a blatant lie. So if you believe that for any reason other than you like to hear it, I'm sorry to tell you that's incorrect. It's not real, and not real within the next decade, at least. Who knows what long-term shifts that could bring. But to me, it tells me that Trump, first of all, doesn't really respect Canada or think that Canada is a country that it has to negotiate with in good faith. And frankly, there's an argument to be made that we actually haven't been the type of partner that would suggest to the Americans, if they're at all able to be convinced of this, that we are that partner, because we are trying to take a totally different strategic direction. And we're trying to operate in a geopolitical and economic world that doesn't exist. It exists in textbooks, not in the real world. And I think that Trump knows that he can say these things, that they can have an actual real impact on Canada's economy and actually impact investment in Canada. And he really doesn't have to face any consequences for it, because they're way bigger. The United States is way bigger than Canada. It's not really any skin off his back to make us sweat. And he, I think, as the operator that he is, I don't think he necessarily likes the response that Carney gives him when this stuff happens. He wants to be seen, especially domestically, as somebody when he says jump, the other countries say how high. And now I understand that there is an argument to be made that Canada is a sovereign nation and you can't just do whatever the United States wants to do. But actually you can't, because you haven't in the past decades created an economy that is sustainable without the United States as a strong partner. So again, I think when I look at what is going on with the tariffs, what does it mean? It means that we are seemingly pretty committed to a geopolitical strategy, in my opinion, that actually doesn't fit the world that we live in. And that we have to assume that there's always going to be this level of confusion and flooding the zone, to keep using these hockey metaphors, with Trump at the helm. And we've spent the past 2 years complaining about Trump instead of looking at ways in which we can actually tangibly make ourselves better off. And we can do that by forging new trade relationships and all of these different things, but those take time to unfold. And what I see is that we have avoided all of the things that we could be doing to immediately have an impact on the relationship and on our own economic well-being, and we choose not to. For example, when it comes to one of the issues that Trump's has, one of the irritants being dairy, we have a supply management system in this country that makes it very difficult for US producers who consistently oversupply dairy products. They can't send those dairy products in the way that they would like to Canada, because we don't allow imports that fall outside of the quotas, because we want to preserve an industry. And it's not even just the industry. We want to preserve the individuals who live in regions of the country that are politically valuable, Ontario and Quebec, rather than, look at the impact of our relationship with the United States. And ironically, these are the provinces that are most exposed to not doing that. So I know that's kind of a long explanation, but what do the tariffs mean? The tariffs mean that what we've been saying on this podcast, in terms of it's absolute fiction to think that we can go at it alone without the Americans, or that they don't have infinite leverage over us, or that we can't actually, thump our chest and think that we're a big deal when we don't have the fundamentals to back it. All of that is just remaining to be true. And so we can be mad at Trump. Yeah, he's kind of being a little bit of an asshole on this for sure. But what are we going to do about it?
Well, yeah, what are we? They're, quite frankly, they're not likely to do anything. So if he's unwilling to give Trump what he wants, which I think is perceived as being a political interpretation and performative, you're kind of stuck between a rock and a hard place, where you're performing for the liberal voting base so that your elbows are up, I guess, and then Trump largely doesn't care, or is
and
not
nor does
getting,
he have to.
No, doesn't have to. So now we are sitting in a situation in which we're unlikely to get the solution we're hoping for. And I'm interested to see what the next domino is. We got a little bit of signal from Premier Ford, where he had spoken to our need to tariff equally in return, which would then, obviously, you would see Alberta do almost nothing. You'd see Saskatchewan do almost nothing. And then you'd have the economies hardest hit by this hit even harder, which would then cause those economies which are already currently in recession to get worse. And now what is likely, I think the next step is Premier Ford is going to request a Daniel Smith to be like, no, we're going to tariff our energy, because that is literally the only thing that is going to bother Donald Trump in any way, shape, or form. And that is then going to request cooperation from a province that has received zero in 25 years from other provinces, which seems challenging given the current dynamic. Now, that next domino to me seems like, okay, that occurs. I don't believe it's going to happen. Maybe you can answer this for me. Can Carney force that?
Force what?
A tariff on energy exports out of Alberta?
Yeah, I'm pretty sure.
Okay, I don't know. I don't know that answer.
Not out of Alberta. I don't know exactly the vehicle that would be used, but yeah, like there are definitely things.
There would be a mechanism in which he could do that. That would be
for sure.
But then that stokes separation fears even more, or that separation fire even more.
But like that kind of politics is writing checks that our economy can't cash. Like in theory, can he do that? Sure, maybe in one way or another through a couple of levers. But like, you know why he's not going to do that? Because he can't afford to. And this is the whole point of the story when it comes to Alberta's situation in Canada and the sort of limited chess moves that Carney has, is like, it's one thing to act like you have a bunch of options, but like the emperor has no clothes. You actually don't have a lot of options. And that is blatantly clear to everybody. So it's like, if I have to tell you, like I always say this in politics, if I'm Mark Carney and I have to tell you, President Trump, the Europeans, et cetera, that I have leverage, I have zero. Mm-hmm. So, I mean, good luck with that. This is the thing, is like, why can't we just jump to the part where we actually take the training wheels off of our economy and just let business grow and thrive in the way that it can? We have everything that the world wants, and yet we refuse to do anything about it. Like, we don't actually, the United States is actually irrelevant to us in why we aren't the country that we could and should be. And I'm so sick of everybody blaming the United States as though it's their fault that we suck, because it's not entirely, at least.
Well, this is all mimetic theory. We're never going to make the scapegoat ourselves. We always need one. And we sure as heck on the left are not going to make our leader and past 13 years of leadership, 12 years of leadership, the scapegoat. It's much more comfortable to make it big orange man. And so to an extent, I understand it. It's natural. It's human nature. And I don't foresee it going anywhere.
We've also just told an entire generation of people that wealth equals the home equity that you have in your house, because it increases 20% year over year. And like, that's also not productive in a society. Sorry, but it's not.
No, agreed. So with all of that said, I'm very concerned about the trajectory of tariffs here. I don't foresee it going away. And especially not through November. So it's likely we could have 2 or 3, 4, or even 4 months of these tariffs being an issue. If and when the Republicans lose the House, maybe things start to change. But until then, it's going to be rocky. And luckily for our specific province, we're going to run an enormous surplus this year. And
God willing, we'll find out on October or August 31st in the first quarter fiscal update.
How if they aren't, I don't know what they did.
They are. There's no, I mean, I don't know. I don't have special knowledge of the books, but like it's.
I can do math really easily.
Yeah.
And unless
I got a calculator.
Unless they're spending money in really, really ridiculous ways that no one's noticed yet, I can't foresee there being a deficit. So
you also can't do that in a government. Like, it's important to recognize that like governments can't just spend more money than they've budgeted for. And so we've budgeted for X. We projected a $9.5 billion or 9.4, I can't remember, deficit. So all we need is for the delta on oil prices to have made up a $9.6 billion difference. So all we need is to have brought in more or be projected to bring in more than that, and we will be in a fine position.
Yeah. I know where prices currently are and where they've been all year. So nowhere near where they modeled. So
nowhere near $56.
Not even flipping close. So that does soften the blow in one province. It also helps the rest of the country, no doubt. I also think that is our one saving grace. And I think this is where I'm going to close, Mel. There was an incredibly compelling 2 podcast episodes on Invest Like the Best, my favorite podcasts of all time. The most recent one on natural gas, I think, was so terrific. And I believe all Canadians should listen. But it speaks to the coming devastation in electric prices in the United States, more specifically, because of their lack of natural gas and the ever-growing demand on because of obviously the data center expansion. However, and I think astutely the investor/analyst that was on spoke to the opportunity here. One, obviously for nuclear, there's opportunity in solar, all of those things, but he spoke directly at Canada, being like, those homies got endless natural gas up there. We have a great relationship with them. And I'm like, well, I don't know. You haven't been talking to us, obviously. But he spoke to just how important it would be and how accessible it actually is if they wanted to get it down into the Midwest. And obviously that points to pipelines. But politically, I foresee in the next 2.5 years, probably prior to 2030, there's going to be a need. Not like this would be nice. The Americans will demand that there be a natural gas pipeline built to Alberta because they will have to have it. They don't have an option unless they are somehow come up with the political will to build nuclear, which they just don't. And I think that is directionally the most important shift in the American economy. They have operated as an energy exporter for the last 20 years, effectively, maybe 15. That is changing. Not that because they're not going to export oil, but they will not have the ability to export natural gas like they have because the growth in demand is going through the effing roof. And that then will require them to come up with additional solutions. And what Alberta has done so, I think, strategically well, has crafted this scenario where we have the infrastructure to accept new data centers to be built here. We're already seeing this occur. It's a greater than 50% likelihood that we get this metadata center built. We have a blueprint for doing something really great here that they can't actually do in the US in so many states. And as a result of that, they're going to have to import the gas that they are not going to be able to pull out of the ground there. And so I leave that mostly as a positive note as a Canadian, that not all is lost with the Americans. I think generally speaking, they love us. We still have a strategically good position for their defense. And when you consider a lot of those things, I think giving up dairy and a few other important sticky points in CUSMA might just be worth making Big Donnie T happy. I don't think all is lost. I don't think we're going to spiral out of control. If you're looking at the underlying signals in the Canadian economy, it's not so bad. It might have sounded like that for the last 50 minutes, but I'm telling you, it's not that bad.
No, it's not that bad. We have excellent prospects. We just need to walk through the door.
100%.
Let's do that.
Mel, thank you so much for your time.
Awesome. Thanks, Joel. See ya.
Bye.
That's the show. If it made you think, share it with someone who needs to hear it. And hit follow so you don't miss the next one. New episodes every 2 weeks. Until then, keep learning, keep earning, and keep investing. See you next time.